Welcome. My name is Reaz, and this is my channel Echo Envision. If you're interested in, make sure to subscribe to the channel and hit the thumbs up button for support. Title: Unveiling Legal Ways the Wealthy Pay $0 in Taxes. Open with a bold statement. Did you know some of the wealthiest people in the world pay little to no taxes? And it's completely legal. Explain that this video will break down the legal strategies the wealthy use to minimize their tax burden. Emphasize that this isn't about loopholes or cheating the system, it's about understanding how the tax code works and how it can be used strategically. Set the tone. Whether you agree with it or not, this is how the game is played. The power of tax deductions. Start with the basics. Tax deductions reduce taxable income. Explain how the wealthy maximize deductions through charitable donations, donating to charities or setting up private foundations. Business expenses, writing off everything from travel to office supplies. Mortgage interest, deducting interest on high-value properties. Example: a billionaire donating $1 million to charity can deduct that amount from their taxable income, potentially saving hundreds of thousands in taxes. Key takeaway: deductions are available to everyone, but the wealthy have more resources to maximize them. Capital gains versus ordinary income. Explain the difference. Ordinary income, salaries, wages, and bonuses taxed at rates up to 37%. Capital gains, profits from selling investments like stocks or real estate, taxed at 0%, 15%, or 20% depending on income. Show how the wealthy earn most of their income through investments, not salaries. Example: if someone earns $1 million in salary, they pay up to $370,000 in taxes. But if they earn $1 million in long-term capital gains, they pay only $200,000 or less. Bonus tip: holding investments for over a year qualifies for lower long-term capital gains rates. Tax-deferred accounts and retirement plans. Explain how retirement accounts like 401ks and IRAs allow tax-deferred growth. Discuss contribution limits and how the wealthy use strategies like mega backdoor Roth IRAs to contribute more. Highlight the power of compound interest. Money grows tax-free for decades, resulting in massive savings. Example: a $50,000 investment growing at 7% for 30 years becomes $380,000, all tax-free if withdrawn correctly. Mention that these accounts are available to everyone, but the wealthy can maximize their benefits. Offshore accounts and tax havens. Briefly explain how offshore accounts work. Wealth is moved to countries with low or no taxes. Mention popular tax havens like the Cayman Islands, Switzerland, and Bermuda. Clarify that offshore accounts are legal as long as they're reported to the IRS. Discuss how the wealthy use these accounts to defer taxes or shield income from higher tax rates. Example: a billionaire might store $100 million offshore, earning interest that isn't taxed until it's brought back to the U.S. Business structures and pass-through entities. Explain how the wealthy use business structures like LLCs, S-corp, and partnerships to reduce taxes. Discuss pass-through income. Business profits are passed through to the owner's personal tax return and taxed at individual rates, often lower than corporate rates. Highlight how business expenses can be deducted, further reducing taxable income. Example: a business owner earning $500,000 might deduct $200,000 in expenses, paying taxes on only $300,000. Mention that small business owners can also use these strategies, but the wealthy often have more complex structures. Real estate and depreciation. Explain how real estate offers unique tax benefits. Depreciation. Property owners can deduct a portion of the property's value each year as a loss, even if the property is appreciating. Mortgage interest. Deducting interest on loans for investment properties. 1031 exchanges. Deferring capital gains taxes by reinvesting profits into new properties. Example: a real estate investor buys a $5 million property, deducts $200,000 in depreciation, and pays taxes on only $300,000 of rental income instead of $500,000. Key takeaway: Real estate is a powerful tool for reducing taxable income. Charitable foundations and trusts explain how the wealthy use charitable foundations and trusts to reduce taxes. Charitable foundations. Donations are tax deductible, and the foundation can invest and grow its assets tax-free. Trusts. Assets placed in trusts can be shielded from estate taxes and income taxes. Discuss how these tools allow the wealthy to control their wealth while minimizing taxes. Example: a billionaire donates $10 million to a private foundation, deducting that amount from their taxable income and avoiding millions in taxes. Mention that these strategies also have philanthropic benefits, but the tax advantages are significant. The role of tax professionals. Highlight the importance of hiring top-tier tax professionals, accountants, lawyers, and financial advisors. Explain how these experts help the wealthy navigate complex tax laws and identify opportunities for savings. Mention that while these services can be expensive, the savings often far outweigh the costs. Encourage viewers to consult professionals if they want to explore these strategies for themselves. Recap the key strategies: deductions, capital gains, retirement accounts, offshore accounts, business structures, real estate, and charitable trusts. Emphasize that these methods are legal and available to anyone, but require knowledge, planning, and resources. Pose a question: is this fair? Should the tax system be reformed, or is this just smart financial planning? If you found this video helpful, give it a thumbs up, share it with a friend, and subscribe for more content on finance and taxes. Let me know in the comments, what's your take on these strategies?